Hello everyone, good afternoon and welcome to our videos. Welcome to Sami Forex. So today we're going to be taking a look at our topic for our classes. Okay, uh, let's see what we've got here. Beginner stage. Okay, yeah. Yesterday we talked on the introduction to the chart. Okay, and I believed a lot of you have watched the video. So today we're going to be talking of price action. Okay, price action. Let me include trading, price action trading. All right, uh today we're going to be looking at price action trading here. So guys, please do your best to follow my teachings very well. Like I said, I'm teaching everyone from scratch. You can see the kind of topics I have right now: introduction to charts, price and all that, concept of supply and demand, how to analyze the market and all that. So these are for beginners. I have topics for the intermediate level as well, and then as we proceed I will have topic for those whose problem is just to make profit out of the market. All right, so where are we? Beginner. Okay, so we're going to be looking at the price action trading for today. So guys, if you're new to my channel, please don't forget to subscribe to that my channel. Okay, like every video I drop and comment below whatever topic you want me to treat. Don't forget to comment below. Okay, and if you're watching from YouTube randomly, not from my group, please visit the description link below and join our trading group on WhatsApp and on Telegram. Okay, we also offer trading signals as well. Right, subscribe and hit that bell so you get notified by YouTube anytime I drop a video. You don't want to miss any of these topics, seriously, especially if you're wanting to learn how to trade forex and don't have the money to pay for any mentorship. This is the right place for you. Okay, so let's quickly go to the chart. That's where I will stay to explain and talk on this very topic, price action. Okay, so what is price action? You may ask, what is price action? You've been hearing people talking about price action, price action, price action. What exactly is this price action? It's very simple. Price action is not a name given to a particular thing. Okay, it's not a name given to a particular thing. Price action, I would say, is a combination of a name for a combination of tools. Okay, a combination of past events in the market. Okay, a combination of uh, every trader's belief in the market. All these can be summed up to be called price action. I will explain that. Okay, I will explain that. Now, when I say price action is a combination of tools, um, yes, there are certain ways. There are some traders in the market who make use of some tools like some drawing tools, some indicators, okay, to determine the movement or the market direction from its current price. Okay, that is what I mean by price action is also a combination of tools. Now, these tools can be said to be the trend line, uh, and all that. There are so many tools in the forex market right now. Okay, the trend line, the Fibonacci, and all that. Okay, now when I say price action is a combination of belief, now they say history repeat itself. Okay, now as a price action trader, we believe that um whatever I saw happened yesterday and I'm seeing it happen today, I believe that after the play out will also repeat itself today. Now let me go quickly into the chart and I will explain better there. Here I think I have here. Let's use this MT5. Now, as a price action trader, I believe if something happened yesterday, if I was trying to go to London, for example, and along the way, okay, let's say while on the plane, there was this climate change and the plane almost crashed. Let me just use that example. The plane almost crashed, and then you peradventure God saved you guys and you arrived at London without anything hurting you guys and you came back to your country. Now, on going back to that same London again the following month, let me just use month, the following month, and you got to a stage, that very hour, that very time, okay, on the air, you still got this climate change again that happened the previous moment when you were traveling. What will come into your mind at that point? Oh my god, this climate change occurred last time and this plane almost crashed. That is exactly what will come into your mind, and you will believe that this plane might crash that period. So you, that is the history you knew is playing that presently right before you, and you believe that because it happened that way, it might happen exactly that same way. That is the same thing in price action trading. Now we have so many things. There are so many strategies traders use to detect or determine the market or the price movement. Okay. Let me say, I know you will not understand this stage. Let me say, okay, let me look for an example right now for you guys. A very, very clear example. Uh, I'm seeing some here, but I need a very clear example, a very, very clear one. Let me use a currency pair, Euro USD. Let me use this. Let me go back. Let me clear this period separator so you see very well. Go. All right, let me go. Let me use a higher time frame where you see very clearly. I want to use the M and W patterns here. Okay, now let's use this example. Um, this is July 28th. Okay, between July 28th and July 31st. Okay, we had this behavior in the market whereby the market went up. Have you seen? Came down, went up again. A kind of M formation. Have you seen? A kind of M formation is what's happening. Is what happened there. Take a look. Between July 28th, between July 28th and July 31st, that's about 3 days interval. See what happened. Market did this, pushed up, fell, then came back, a kind of M formation, all right, and dropped. Now, as a price action trader, this happened to be the history. This very example happened to be the history because it has passed. Okay, it has passed. This is July. Now, as a price action trader, take note of this place. A kind of M formation and it drops. Abi. Now let's go. Let's assume let's go and see the present. And now see what happened there again. See what happened here between August 18 and August 22. See what happened. Price went up, fell, went up again. A kind of information and did what? Fell. Exactly the same thing that happened July 28th and July between July 28th and July 31st is what now occurred here again. July, August 18 and August 22. Have you seen? Now let's go again. Two things have happened in the past that played out almost the same way. Now, see here again. Between August 30th and August 31st, see what happened. Price pushed up, fell, pushed up again a little, and then fell. This is another M formation. Three occasions have price done something in the past and it played out. Have you seen? We are still moving towards the present uh, market. Okay, let's go. All this while you've been waiting for that very thing to happen, but it is not happening. Remember? Okay, now let me use this because this is almost the present market condition. Look at this is a live market right now. This is the present condition of the market. It's at 1.05073 uh dollars in the market. Now, this is it. Remember, we went back to the history. As someone who wants to trade price action, we believe that history repeats itself. So, in whatever strategy you're choosing to trade, let's say the M and W pattern, the M pattern that I just gave you example. Now, I choose to trade the M patterns in the forex market. Now, before I start making future predictions, what will I do? I will have to go back to history to try to spot M patterns and how they played out.
That is what will now give you the confidence, a belief that okay, if I am seeing M patterns in my present day of trading, this is what will happen. Do you understand me? If I choose to trade M patterns, now remember in the past, three times have M pattern showed up and it played exactly the same way. Okay, now that will now give me the belief that yes, if today, like today, I see an M pattern trying to form in the market, what happened in the past three occasions will happen again today. Now let's assume the market price is here. The current market price is here. Let me not call all this into the market into the picture. Let me say the current market price is here. Okay, at this very candle here. Now, what look what happened here between October 10 and October 12. If you notice, the space of 2 3 days, 2 3 days, all these things happened. That's why I use the example of you traveling to America, and along the way, you had this bad climate that almost made your plane to crash. Okay, but God helped you and you got to your destination. Now, traveling the next time, probably in a month's time, and you experience the same climate problem again, what will now come into your mind? Exactly what happened in the past. Maybe the plane almost crashed. That's exactly what will happen come into your mind. There's no, you will need a prophet at that point to convince you that this plane will not crash. This is exactly what happens in the market. Okay, if you trade a particular strategy and you choose to trade a particular strategy, and before you make any future which is here, any future predictions which is here, the current market price, you must wait for that incident that occurred in the past to start playing out so you know the outcome. Now let's assume we are here. Let's assume we are here. The market is currently here. What are you looking for now? Formation. Okay, I'm looking for what? M formation. Now look at, price has been going up there. It has not given us any clear formation, M formation in the market yet. It went up and all that. But look at what happened at this point. Look at what happened in this point. Price pushed up here. Price pushed up. Let me use from here. Price pushed up from here. Have you seen? Went down. Now went back up again. Have you seen what's happening here? I will explain all these things deeper as time goes by. But as for the beginner stage, I don't want to core terms that you might not understand. Okay, now look what happened here. After price have done all the magic or movement, you're not seeing what you were expecting. But coming to this point, you see price doing this, pushed up, went down, okay, came back again and pushed again. What is now forming now? It has formed the first leg already. It's now forming the second leg. Now you see that it's trying to come. It's now trying to come down. What is now coming into your mind? Man, this M pattern that occurred three times in the past and market dropped is now what happening again. At that point, that belief, that confidence already come into you that if this pattern forms again before my very eyes in the present market condition, I will sell it. I will trade it down. Okay. Now like I say, we are assuming this is the current price of the market, and you're watching right before your eye. Price did this, went up, fell, went up again, and is now falling. Already that belief has entered you that this market, once it does this pattern, it will fall. At that point, what will you do? You will now what? Join the market to fall. And if you believe this at that point, see what happened. If you sold this market at this point on believing that what happened in the past, history repeats itself, and this pattern happened in the past and it fell. Okay, with that belief, you enter the market at the sell at this point, for example. See what happened. The market actually did what? Fell for you. Have you seen? I hope you're understanding this, guys. If there's anything you're finding it confusing right now, go to the comment section below and drop it. Ask me any question you want to ask me. Don't take the opportunity for granted. Okay, go to the comment section, ask your questions regarding this topic or any topic I have treated before. Ask your questions and I will reply you. Okay. Let me use divergence. I will explain little about divergence, then treat this very topic with that. Let me go now. Don't worry, I'll teach this fully very well. But quickly, let me just throw one or two things so you understand what I mean. Now, for a trader to be able to trade divergence, you must have an oscillator. Oscillator is an indicator below your chart. That's why I went to apply this. Okay, I will explain deeply about this. Don't worry, we'll get there. Now, what is this guy doing here? Now, generally, it's meant to follow this price up and down. What do I mean by that? If this guy is falling from this point, this guy should fall from this point. If this guy is rising, it should rise. If he's falling, it should fall. If he's rising, it should rise. And so on and so forth. Okay. Now, if by any means this guy does something different from what this guy is doing, that is divergence. Now, example, so that we use it to treat this topic so you understand it very well. Okay, example. Now remember this guy, they are meant to follow prices up and down. Now let's start from this point. Price dropped, it dropped. It went up, oscillator went up. It dropped here, oscillator dropped. It went up from this point, oscillator went up a little. Have you seen? It dropped below this point, but oscillator, what happened? It dropped probably above that point. Okay, below this point, it's still following price up and down. It dropped, it went up, oscillator went up, it dropped, oscillator dropped. Have you seen? It went up, oscillator went up, and went down again below this very point. But what was the oscillator supposed to do? Oscillator was supposed to go down again below this very point. But what happened? Oscillator went down but could not go below this point. Even when the price chart was going below other lows, we call it lower lows. This one was not doing that. This one rather went down but could not break this point. Now, see what happened. Let me not use this one now. Every time you see the lowest point in the market is called a low. We had a low here. We had a low here. We had lower low LL. We had lower low LL. Now we had lower low again LL. But what happened this time? Oscillator gave us higher low. Why is it higher low? Because this one is higher than this one. But here this one is lower than this one. So the divergence has occurred there. Okay, this period in time, this guy is not agreeing to this guy. That is what you as a divergence trader you're trading. At that point, you mark out the lows. You mark out the lows that are not corresponding to each other. You mark out the lows that are not aligning with the oscillator. Okay, those are the lows you connect as a divergence trader. Now, at that point, whenever this thing happens like this, is a bullish divergence whereby you believe the market wants to reverse up. Okay, I will treat that like I said very well. You believe that the market wants to reverse up. Now, at that point, what happened after you marked at these lows? What happened? The price did what? Went up from here. Let me use the shape. I told you guys about price action. There's a combination of tools. Have you seen all these lines I'm drawing? They are tools used by price action traders. All these lines you see me draw, these are all the tools I'm talking about. Combination of tools. These tools are what price action traders use to determine the market direction. Okay, now combining all these tools might predict the market direction for anybody, and that is what we believe in. Now, have you seen the corresponding lows that are not aligning to each other's decision? Okay, those are done. Now, whenever you see something like this happening, it means price wants to reverse back up anytime soon. And what happened? From your belief, price did what? It right back up. Have you seen? I don't want to talk about the bearish divergence, but from here you believe that price will go back, and it did what? Went back up. Now let's go and spot another one again and see if price did exactly. Remember, that is the past, which I call the history. And I say history repeats itself. That is what we believe in. Okay. Now we have another one here again. Price went down, oscillator went down. Went up, oscillator went up. Went down a little, oscillator went down a little. Went up a little, oscillator went up. And then went down and formed a lower low. But what happened on the oscillator? Oscillator went down but could not form a lower low. Instead, it formed a higher low. Now, at that point, as a divergence trader, what will you do? You mark out with a trend line tool. As a price action trader, a trend line tool, mark it out the areas that are not aligning with each other. Now, have you seen? You mark out those lows that are not agreeing, that are not aligning. Have you seen? I mark them out now. Have you seen? These are the areas, the low. Have you seen? I'm using this crosshair to now. Here is not like here to here. The oscillator is not agreeing to the chart. That is what you're looking for. That disagreement between the oscillator and the price. Now, like you believed in something on this scenario now, that if you see something like this again, it means it wants to go backward. Remember, we saw it here. From the belief he created that it wants to go back up. Now, as a price action trader who believe history repeat itself, we went again. We now found another scenario here where oscillator refused to agree with the price. We believe that whenever something like this happens, it means a falling market wants to rise, isn't it? And what happened again? From your belief, what happened? Price did what? Price rose from here again. Have you seen? Let's continue marking again. Let's continue going. Let's continue. Let's continue. All this period, price is doing what? The same thing. Now, see, getting to this point again, price did what? Price fell. Oscillator fell. Price gave us a low here, gave us a push, a little push up, gave us, and then came back again and broke this one, forming what? A lower low. But what happened? Oscillator came down but could not form a lower low. Instead, it formed what? A higher low. That disagreement has occurred again. Remember, it has occurred again. What are you supposed to do now? Bring out your trading tool, your trend line tool. Where is it? Okay, here is it. Bring it out and then mark those areas that are not agreeing to each other. These are the two lows are not in agreement. Here and here, they are not in agreement. Okay, here. Mark it out. Have you seen? You've marked these two areas out that are not aligning to each other. All right. So now you believe that anytime something like this happen again, it will do what? Push a market that's falling up. And what happened? The market pushed, even though it did not push very well, but at least if you took this trade, you might have made $1 or $2 from here, depending on your lot size. Have you seen, guys? So that is what I mean by history repeat itself. If you want to go again, and so on and so on and so on. Now, like I said, it all falls down to the kind of strategy you want to trade. If you choose to trade divergence, any strategy at all, now what you do before you predict any future direction of any market, go back to the history. That strategy you say you want to trade, how many times has it played out in the history? Because there's nothing new in the market. Anything that you see happening in the market has happened before, multiple times, countless times. The forex market wasn't found today. Okay, our great grandfathers made this market, so it has happened in the past several times. So go back, count how many times, backtest, we call it backtesting. Check how many times it has played out and what happened after after that pattern or after that trading style showed up. After it showed up, what happened? You understand? Once you count how many times it happened, like as someone who wants to trade divergence now, you between just between August 16, okay, August 16, remember, between August 16, 2023 and August 16 and September 25 here. August 16, between August 16 and September 25, we have won 3 trades in a row, back to back. So depending on how much lot size you're using, all this one you've made so much money. Okay, so depending on the strategy you want to trade as a price action trader, make sure you go back to the past, to the history. That will bring you so much confidence. That's one of the advantage of backtesting, of going back to history to check how many times your trading pattern, your choosing trading pattern played out and how many times it worked out for you. Okay, so there are so many patterns in the market, there are so many strategies in the market you must choose from. All right, so but I use the divergence here for example because I trade divergence and nothing else. Now you might want to trade the bullish flags, you might want to trade the channels, you might want to trade anything. There's so many thousands of strategies traders use to determine where to go in the market, whether up or down. Okay, depending on the one you choose, go back to history and make sure you check how many times it has played out and how many times you won that market or how many times you might have lost that market, so that if you're seeing it presently right before you forming, that confidence must have already been in you that this thing has played out in the past and it's happening today again. I will take this market, probably to go for me, because in the past he have out of 100 times, he worked at 60 times, he worked at 70 times. Okay, let me see how far this one will go. Now, the consciousness of this price did not work out all the time. We help you to maintain or manage your money. Okay, if a trading strategy out of 100 times you've back tested, you've tested in the past, you won 100 times. If it's playing out right before you will want to risk all the money in your account, because you know that after all it will go. You have that, you believe fully well that in this market, out of 100 times I tested it, you worked 100 times, is a holy great strategy. I won't lose with this kind of strategy, of which is not true. There's no strategy in the market that won't bring losses to you. Okay, so out of 100 times, if 40, 60, 70 plays out, that 30 that did not play out should make you to be very conscious of how much you risk in the market. Like this very one now is a signal I brought out today, but it traded a little with some pips, but immediately went back against us. So with that consciousness that tomorrow if I see this kind of thing again, even though it's very fine, I will know that there's every tendency that I might also lose this market. So instead of risking some amount of money, let me see how much I can comfortably risk. That is risk management for you. Okay. So summarily, price action is a way of belief within traders, system of belief within traders. Okay, it's also a combination of tools. All these lines you see me draw here, all these lines you're seeing on this chart, they are tools that are helping me to determine the market direction. That's why I say it's a combination of tools, a combination of past events. Like we went back and saw how many times divergence occurred and how it played out. And if I see it happening today, I will know that okay, due to how many times it has played out in the past, this is what is supposed to happen in the market. That is a way of belief you build for yourself. You build that strategy for yourself, and it will give you the confidence to always approach in the market. Okay, so that is it for it. That is it for the very video. Like I said, if you're finding this video very helpful, guys, don't forget to subscribe to my channel. Okay, subscribe so if you get videos like this in future, you won't miss out. Hit that notification bell so you always get uh notified by YouTube whenever I drop a video. All right. And if you have any question regarding this very class, regarding very topic, please drop it below. Anything you want me to treat on, drop it below that comment section. There's a link to my WhatsApp group, everything. Click on them and then join our trading platform, okay, our trading group, so you get signals for yourself and also learn for free. All right. So thank you very much for your time, and I wish to see you next time again.